I'm Natalie MacDonald, and it's time for our Targets in Focus interview, where we ask an FX expert for their predictions on three major currency pairs. Talking to me today is Joost de Rujiter, owner of Quantts, based in the Netherlands. We'll start today with the euro-yen. The euro has been struggling this week, while the Japanese yen continues to make headway against the commodity currencies, in spite of being the worst performer of 2012 so far. What can we anticipate for the euro-yen in your 1, 3 and 12-month predictions?
We expect the euro-yen to test the important psychological resistance at 110, where also the 50% Fibonacci level is, from the down movement of 123 in April 2011 till 97 in January this year. However, we don't expect that pair to break that heavy resistance in the short term. Moreover, we believe the euro-yen will trade sideways, within two psychological levels of 105 and 110 in the short term. For the longer term, however, we expect the upward momentum to resume, as downside risks have been reduced, especially from the perspective of monetary policy in Japan. And in addition to that, Japan is a net importer of oil, and the earthquake last year has increased its oil dependence, and we expect the oil price to continue to climb. And if you look at the Eurozone, the numbers are not deteriorating any further, with a year-on-year GDP for Q4 at 0.7%. And the Greek solution should also give the euro versus the yen some upside potential. For the euro-yen, our 1 month prediction is 107.5. For 3 months, we expect the level of 111, and for 1 year from now, our forecast is 117.
The SNB, in their quarterly meeting today, opted to leave interest rates unchanged at 0. How do you think this decision will impact your expected rates for the US dollar Swiss franc?
For the US dollar, we're bullish on the US dollar. So, first the Swiss franc, our 1 month prediction is 94 cents. For 3 months, we expect 97 cents, and for the longer term, 1 year, we expect 107. If you look at the U.S. economy, the macroeconomic data showed further signs of strength in the U.S., with the non-farm payrolls at 227,000, and the ISM non-manufacturing improving to 57.3. So the most recent data surprised on the upside, but the only disappointing figure was the trade balance, which came out at minus 52.5 billion. So overall, with a better data flow, a healthier labor market, this all points towards a further reduction in the probability of additional quantitative easing. And the FOMC statement acknowledged better incoming data and upgraded its assessment of the economic outlook. And as these global economic concerns decrease, we expect the Swiss franc to receive less support from safe haven flows.
The Canadian dollar has had a relatively strong week compared to the pound, which seems to have depreciated off the back of concerns that Britain may undershoot its inflation target of 2%. Can you please give me your short, mid and long-term expectations for the pound Canadian dollar?
Yeah, we expect that to continue. So our expectations for the CAD against the Canadian dollar for 1 month are 153, for 3 months 150, and for the period of 1 year our target is 145. So we favor a short position in the British pound versus the Canadian dollar, as several factors are beneficial for the Canadian dollar. First of all, Canada is a direct beneficiary of the strengthening of the U.S. economy. And besides that, Canada is a large oil exporter, and like I said earlier, the risk of oil prices remain to the upside. And these factors should help the Canadian economy. And if you look at the UK, despite signs of stabilizations since UK's November bleak inflation report, and while concerns of a double dip are overplayed, we still believe that the UK economy remains weak, and we don't expect too much too soon. So as such, we expect the MPC to forecast modest growth. And as a result, we expect the MPC to expand the asset purchase program.
Joost, thank you. Still to come this week, we'll be bringing you another Targets in Focus interview, an overview of the latest headlines in our press review, and the all-important week ahead, where we speak to an expert about the upcoming economic news releases that you won't want to miss. For now though, goodbye.